Assalamu alaikum wa rahmatullahi wa barakatuh. And this is the continuation of our revision class in SS3. And the last one on this manufacturing account is this question. That's the past question on Acct. And you are given the trial balance below was extracted from the book of Single Enterprises, a sole trader who run a factory which manufacture fashion products as at 31st December 2005. And you have the debit and credit. You have a sales 2.5, purchases of raw materials you have a 1 million. You have a raw material stock at 31st December 2004 90,000. Finished good stock at 31st December 2004 180,000. And remember, you are asked to prepare 2005 account. All this one with the 2004 will represent your opening stock of raw materials and opening stock of finished goods. You have a debtors and creditor, office fixture and fitting at cost, that's 200,000. And you are given the manufacturing plan at cost 1.2 million naira. Office fixture and fitting, you have a depreciation 31st December, column. Office fixture and fitting 100,000, manufacturing plan 600,000, and you are given the rent. When you have a rent, 150,000, manufacturing wages 250, manufacturing wages 250, 350,000, and you have the administrative salary 50,000, manufacturing expenses 110,000, capital 31st December 2004 500,000. You have a bank overdraft, general administration expenses 60,000, drawing 180, light and power 200,000. And after 200,000, you have a balance. Here you have additional information. And take note of one thing concerning the additional information. Any item that appear under additional information, you must give them the double treatment. That is, the first treatment will be on manufacturing or trading profit and loss account, and the second treatment must be on the balance sheet of that particular company. And you have the additional information. A, office fixture and fitting are depreciated using the reducing balance method of 30% per annum. The manufacturing plan is depreciated on straight line basis, assuming a life of 11 years and a residual value of 100,000. And you have an accrual of light and power of 40,000 to be made at 31st December 2005. Stock of raw materials, that's closing stock 130,000, finished good 210,000. 2/3 of the cost, light and power and rent, remember 2 items joined together, relate to the manufacturing section of the firm, and the balance relate to the office. You have item G. It is considered that 10,000 of the debt are bad debt. During the year 2005, the proprietor took finished goods value at the cost of 20,000 for personal use. You are required to prepare the manufacturing trading profit and loss account and balance it. And to start with the manufacturing trading profit and loss account, remember you have a 2 or 3 accounts joined together. Manufacturing one aspect, trading account one aspect, profit and loss account another aspect. And to begin with the manufacturing account, you have an opening stock of raw materials. When you are given the opening stock of raw materials, that's one will appear under the major body of the trial balance. That's why you are given the raw material stock at 31st December 2004, 90,000 naira, hard purchases. Before you transfer the purchases to under your opening stock of raw materials, check the additional information whether you have another item that will affect your purchases, like return outward on raw materials, carriage inward on raw materials, and so on. All the raw materials withdrawn for personal use by the owner of the company. If there is nothing like that, and you transfer the 100,000 to under where you have that is the last column of 90,000 naira will give us the figure. And when you have a 1,090,000 and you have the figure, and you now less the closing stock of raw materials, which is 130,000. When you now, that's the closing stock of raw materials, you have it under additional information. And the next one, you have the, after you minus the closing stock of raw material, you have a raw material consumed. Raw material consumed, you have a 960,000, and you are giving direct expenses. Remember, if you are giving the royalty, must be under the immediately under the material consumed, or you are giving the manufacturing wages, must be under this material consumed. But here you are giving only manufacturing wages, 350 plus 960,000, and we give us 1,310,000, which is that's your prime cost. Your prime cost, you must write that word in capital letter, indicate that it's very, very essential. And the next one, you have a factory overhead expenses. You have a column, and when you have a column under the factory overhead expenses, you have a manufacturing plant. You have a manufacturing plant and power. Manufacturing plant and power. Here you have the whole full value of the manufacturing plant and power. Manufacturing plant and power is 1.2. When you have a manufacturing, you have a manufacturing expenses. You have a manufacturing expenses. When you have a manufacturing expenses, you have a 110. Under additional information, you have the item F, 2/3 of the cost of light and power and rent related. And where you have a manufacturing light and power, you now calculate the 2/3 of the money, and the 2/3 of the money will now give us 133,333. You don't need to approximate that one because it's 3333, and you now take the accurate figure, 133,333. And before you close that one, you have another additional information whereby you have a item C, an accrual for light and power 14 naira is to be made on 31st December. And when you have a light and power, and you now 2/3 of the accrual, which is 40,000, will give us 26,667. You add it to this figure, and you now move on to the manufacturing expenses. Manufacturing expenses does not have the adjustment, and all this one manufacturing is another name tagged with the factory expenses. It's either you are giving factory expenses or manufacturing item like all this one, and you are giving the factory rent. Your rent, you are giving ordinary rent 150,000. Calculate the 2/3 of 150,000, and we give us calculate the 2/3 of 150,000 will give us 100,000. 100,000 transfer to the factory overhead expenses. And you have a depreciation on plant. Depreciation on plant, you are given the instruction. Follow the instruction very well. Where you have the item B, the manufacturing plant is depreciated on straight line method, assuming the life of 11 years and residual value. Now to apply this formula on plant, you have the cost minus residual value. What's the value of this? The manufacturing plant is 1.2 million, and 1.2 million minus 100,000 residual value divided by 11 years, and you have a 1.1 million naira. After you minus 100,000 from 1.2 million naira will give us a 1.1 million naira divided by 11 years. And if you divide by 11, and will give us 100,000. And after you arrive at the 100,000, and you now add them together to your prime cost, and will give us the factory overhead, factory cost of production. Factory cost of production here, work in progress is not given, and the market realizable value is not given, and you quickly transfer your factory cost of production to the credit side of the account. You start from the beginning and you write it as factory cost of production, carried down. That's a 1,780,000 on both sides. That's the end of the manufacturing account. And you now move down to the trading account. The opening stock of a trading account you are giving, the stock finished goods at 31st December 180,000. When you have a 180,000 hard factory cost of production, which is 1,780,000, you add them together, will give us a 1,960,000 naira. Remember, you are giving the clause that the proprietor or the owner of the company withdraw 20,000 goods for personal use. You minus 20,000 once the purchases of finished good is not given. If the purchase of finished good is given, we're supposed to minus this 20,000 naira from the purchase of finished goods. But once the purchase of finished good is not given, we need to minus it from the net value of 1,960,000. When you minus it, and we give us a 1,940,000 naira less closing stock of finished good, you get your closing stock under additional information, and 210,000 naira, and we give us cost of goods sold. And the sales is given. The sales that is given is put 2.5 million naira on the credit side of the trading account. And remember, returning inward is not given, no adjustment on the sales figure, and therefore your cost of goods sold 1,730,000 minus 730 million minus 2.5 million will give us 770,000 naira. And this gross profit carried down. You close your account 2.5 here and 2.5 here, and you now move down after your double line. You write on the credit side, gross profit brought down 770,000 naira. And after 770,000 naira, the next under the expenses, you now start beginning again, so that none of these items will left out on treated. And you have administrative expenses. Administrative expenses, where you have administrative expenses, you have 50 administrative salary. You have 50,000 naira. General administrative expenses, you have 60,000 naira. And here you have light and power. Remember, we already used 2/3 of the money under manufacturing account. The remaining 1/3 we now transfer to this account. Remember the accrued of that light and power again, which is 40,000. We already used the 26,667 under the manufacturing account, and we transfer the remaining 13,333 to this account. You had 13,333 together with the 66,667 naira. You had them together. The total, the summation will now be 80,000 naira. And the same thing, office rent. The office rent we have already used. That's out of 150,000. We have already used 2/3 of the money, which is 100,000. Under the manufacturing account, the remaining 1/3 of the money will be 50,000 naira transferred to the P&L account. You have a bad debt. Under additional information, item G, it consider 10,000 naira of the debt are bad debt. You have that's a bad debt. and you write the 10,000 naira. And depreciation on furniture, remember you are asked to use reducing balance method. The depreciation given to you under this information, that is under this particular account, which is depreciation, you have a column. Office fixtures and fitting 100,000, and you are giving the office fixture and fitting 200,000 at cost. 200,000, you quickly minus that 100,000 from 200,000, and with the remaining balance is 100,000. That is, you first of all consider the depreciation given to you under the trial balance, minus it from the figure given to, if you are asked to use the, or if the question specify on the type of the method of depreciation to be used. Here you are asked to use the reducing balance method. 200,000 minus 100,000 will remain 100,000. 100,000 you charge, and the next thing, they ask you to charge the 30%. 30% of 100,000, and will give us a 30,000 naira. And you add them together. By the time you add them together, and the total of expenses minus gross profit brought down, which is 770,000, the net profit will be 490,000 naira. Balance, and you close the account. And mind you, before you close the account, you need to be vigilant to make sure that all your items transfer to this account perfectly. That's why you need to practice very well, and you not use a permutation during the exam. You sure what any question that you wish to attempt, so that you transfer the correct figure. You don't need to rely on anybody. Don't rely on your friend, and you rely on yourself, and so that you'll be able to do everything perfectly. Because any slight mistake that affects your net profit will affect the next account that we ask to prepare. They ask you to prepare the balances at 31st December 2005, and this particular account will cross-check whether all your calculation from the beginning is totally correct or not. You have to prepare this account. Here you have a balance sheet as at 31st December. Remember, you need to write, first of all, write the name of that owner of the account on top before you write the balance sheet as at 31st December 2005. Here you have a liability side and you have the asset side. The liability side, you have a capital 500,000, hard net profit 500,000 plus 490,000 will give us 990,000 naira. Less drawing. Remember, the drawing is giving 180,000. Including, I told you, any item that appear under additional information, you must have it in mind. You are going to give them the double treatment. The second treatment for this, a good withdrawal for personal use, is be under the balance sheet now. The original drawing given to you plus 20,000 naira worth of value of goods withdraw for personal use. You add the two together, it's part of drawing, will give us 200,000. You minus 200,000 from 990,000 and will give us 790,000 naira. Now you move down to the current liability. Under current liability, we have a creditor 220, bank overdraft 150,000, accrued light and power, which is 40,000 naira. That's the second treatment for that accrual again. You have a 40,000 naira, and you now go back to the asset side. Under the asset side, you have a manufacturing plant, which is 1.2 million naira. Manufacturing plant 1.2 million naira. You less depreciation. This time, not ordinary depreciation, we call it a accumulated depreciation, because you have your own personal calculated depreciation, and you are giving another depreciation under the trial balance. The first depreciation given to you under the trial balance is, you have the manufacturing plant, which is 600,000, and you have a 600,000, and the depreciation you charge, which is 100,000, you add the two together, 700,000 minus 1.2 will give us 500,000. Furniture or fixture and fitting 200,000. Accumulated depreciation, the depreciation given to you under trial balance is 100,000 plus your own calculated depreciation, which is 30,000, will give us 130,000 minus 200,000 will give us 70,000 naira. And the next one, you have a stock. Remember, you need to put color because you have more than one stock. Here you have a stock. Closing stock of raw materials 130,000, finished goods 210,000. If you are given the closing stock of work in progress, it must also transfer to this aspect. Here you have only two terms, raw materials and finished goods. You have a debtors. Debtors, you have a 300,000. Remember, under additional information, you are given the 10,000 of the debt are bad debt. You need, after you are giving this one as the first treatment under the profit and loss account as part of the expenses as bad debt, you must also give it the second treatment under the debtor to minus the figure from the original debtor's figure. Will give us 300,000 minus 10,000 will give us 290,000 naira. And after no advance money payment, whatever, and as a result of that, total your liability side, that is, under the liability we have 790,000 plus 220,000 plus 150,000 plus 40,000 will give us a 1.2 million naira. Under the asset side, and you have under the asset side you have a manufacturing plant 500,000 plus fixture 70,000 plus stock of raw materials 130 plus finished goods 210,000 plus net book value of debtors 290,000. You add them together 1.2 million naira. If you want to project, take your own calculator and total the both sides separately, and no adjustment. Your account will be balanced automatically without any adjustment. If you are able to do something like this during the exam, I can assure you, you have your own full mark. No examiner will deduct your own mark. But failure to practice as many exercises as possible during this one, and during this short period you have, stay at home, and you will not be able to do it perfectly because the examination tension will be there whenever you resume to start your work. And if you prepare fully, you have enough confidence that wherever the question is coming out, I'm ready to answer it perfectly based on your previous practice on series of either WAEC series or NECO series or whatever past question. You have 100% assurance that you come out with a flying color. I wish you best of luck. Whenever we resume, if you have any question, you pile it up and just bring it down to the class whenever we resume. And I pray Almighty God will be with every one of us. Subhana rabbika min